What if I told you that some of the best and biggest companies in the world are available at a massive discount right now? Imagine walking into your favorite store and seeing a 20% discount on an item that never goes on sale. It's like Black Friday without the chaos, the fights over TVs, or that person who suddenly discovers Olympic level sprinting when the doors open. That's the kind of sale happening in the stock market right now. Since February 19th, the market has dropped over 6%. But for smart investors like you and me, this isn't bad news. It's an opportunity to get some incredible companies at a significant discount. It's basically the stock market's version of putting quality items in the clearance bin by mistake. The last time stocks like these were undervalued, some investors made millions. The question is, will you seize the moment or will you let it slip away? And hey, if you love finding market opportunities before they blow up, make sure to hit that like button and subscribe. I provide these type of insights so you don't have to spend hours glued to stock charts. In this video, we'll break down why the market dip is a buying opportunity, why Nvidia, Amazon, and Microsoft are top picks right now, how analysts are predicting massive gain for these stocks, and most importantly, how you can take action today. And stick around until the end because I'll share my personal investing strategy on how I've taken advantage of this opportunity. As I mentioned earlier, since February 19th, the S&P 500 has fallen over 6%. The NASDAQ, even more at almost 10%. You may be asking, why has the market taken such a big hit over the past few weeks? There are various reasons, but one major reason would be tied to the recent trade tariffs and tensions announced and implemented by President Trump. The tariffs against Canada and Mexico have raised concerns about the potential economic impacts those tariffs might have and has led to significant market uncertainty. Basically, the market reacted to these tariffs about as calmly as my cat reacts to a vacuum cleaner. Complete panic and running in all directions. There's also been some weaker than expected economic data that many have suggested shows U.S. business activity is slowing down. Also, consumer sentiment has dropped to a 15-month low, indicating concerns about the economic outlook. That may be some bad news for now, but it creates a great opportunity for investors that understand a market like this, allows them the chance to invest in or even more in great companies that are currently at extreme discounts. To quote the famous Warren Buffett, be fearful when others are greedy and greedy when others are fearful. And right now, there is a lot of fear with the market. And as many say, the best time to buy is when others are panicking and selling. And for those that may have concerns with the market continuing downward, remember this. The stock market has always recovered from major events and downturns and ended up at new record highs. This graph does a great job of showing all of the significant events that have happened in the U.S. and their impact on the stock market, but it also shows us that the market eventually climbs higher over time. If you're investing for the long term, this is a comforting graphic to see. If you want to see exactly how small daily investments can turn into serious wealth over time, check out my video on building wealth with a simple daily investing plan. I break down the math in an easy to follow way. The link for that will be above and in the description. Some say that market dips make millionaires. Here's an example of how taking advantage of a dip like this can benefit us as investors. In August of 2018, Nvidia was $7.02 per share. Less than 3 months later, after a dip, it was down to $3.63 and had lost almost 50% of its value. If you would have invested $25,000 in Nvidia in November of 2018, that $25,000 would have grown to over $200,000 in less than 3 years. And by November of 2024, just 6 years later, that original $25,000 would have been worth around $1 million. Now, which stocks should you invest in during this current drop in 2025? I've mentioned Nvidia several times so far and briefly mentioned Amazon and Microsoft, but there are a lot of great companies that are at a significant discount as of the first week in March 2025. For this video, I'll only be highlighting those three, mainly for time reasons, and honestly, I just really love these three companies at their current rock bottom prices. First up, let's talk about Nvidia. Since February 19th, Nvidia is down 19%, even though they announced another round of phenomenal earnings on February 26th. I loved NVIDIA at $140 per share, so you know I'm really going to love it at $112 per share. And NVIDIA isn't just a graphics card company anymore. It's a leader in AI, cloud computing, and autonomous technology. With AI demand surging and so many companies using their chips like Microsoft, Google, and Tesla, I expect to see NVIDIA's stock price go up much higher. And to back all of that up, they currently have a strong buy rating across 42 analysts with an average price target of $175, which is a whopping 55% upside. Next up, we have Amazon, the e-commerce and cloud king. Since the 19th of February, Amazon is down 12%, even though their revenue has increased for 15 straight years. And if you don't know, Amazon is more than just online shopping. AWS, Amazon Web Services branch, makes up 16% of its revenue, and it's growing fast. At this point, the A in Amazon could stand for, actually, we own everything now. My house is basically an Amazon warehouse with a bed in it. As far as what the experts think about Amazon's future, 44 analysts give it a strong buy rating with an average price target of $263, which means it has a 32% upside based on its current price of $199. And finally, the last great stock I'd highly recommend at these great price discounts is Microsoft, who everyone knows for their Windows OS, but they are also an AI and cloud services behemoth. On the 19th of February, Microsoft was around $415, and as of March 7th, had dropped 5%. Not as dramatic as NVIDIA and Amazon, but that's expected since Microsoft tends to be the most stable of these three, boasting a beta of 0.91, meaning it's less volatile than the overall market. For reference, a beta of 1 means normal market volatility. Amazon has a beta of 1.19, while NVIDIA has a very high beta of 1.76. And as I mentioned earlier, Microsoft isn't just about Windows. It operates the well-known Microsoft 365 suite, owns LinkedIn, Azure Cloud, and is leading in AI with its OpenAI partnership. They sure have come a long way from Clippy asking if you need help writing a letter. Now their AI can write the letter, send it, and probably negotiate better terms than you could. And get this, as crazy as it seems, Microsoft's Azure cloud solution is growing at a faster rate than Amazon's AWS. Microsoft, like the other two, also has a strong buy rating across 30 analysts with an average price target of $509, meaning it has an upside around 30%. And if you're into dividends, Microsoft has a small dividend to boot that they've been increasing for 10 straight years. So the question is, will you take action? Or will you be fearful like many others and sell in moments like this? Right now, fear is driving the market. But what do smart investors do in times like these? Many smart investors jump at the chance to invest in or invest more into companies like Amazon, Microsoft, and NVIDIA when these opportunities present themselves. And for those concerned about the risk of investing, the old investing adage holds true in most cases in that the cost of waiting is often higher than the risk of investing. And you don't have to invest in all three. If you're more risk averse, then Microsoft may be your best bet, or a combination of Microsoft and Amazon might interest you. If you're open to more risk and volatility, then maybe NVIDIA makes sense for you. And if you want a piece of all three, but something that is less volatile than Amazon and NVIDIA, there's the Vanguard Growth ETF that currently has roughly 30% of its holdings invested in those three. For me personally, I've bought more shares of NVIDIA during this market downturn because I'm okay with additional risk at this point in my investing journey, and I am a huge believer that NVIDIA is going to shoot past the current price targets close to 180. The bottom line is this is a great opportunity to get significant stock price discounts on many incredibly strong companies. The stock market's on sale, but it won't stay that way forever. The question is, will you take action before it's too late? I'd love to hear what you're doing in this market. Are you buying Amazon, Microsoft, or NVIDIA at these prices? Or do you have your eye on something else? Drop a comment below and I'll reply to all of them. And if you found this video helpful, hit that like button, subscribe, and turn on notifications so you don't miss the next one. As always, thanks for watching and hanging around till the end. Remember, I'm here to make content focused on your money and how to manage it best. See you in the next one.